Yo, what's going on, everybody in the chat? We are back with episode 11 of Pure Alpha.
What up, buddy? How's it going?
It's going pretty good. I see a lot of activity in the chat right now. You know, we're going to be getting into a lot of charts today, talking about some PH universe stuff, talk about the crazy stuff that's been going on with the farms.
Mm-hmm.
We lost Crispy Man.
Oh, man. It's going to go get another cigar, I bet.
We'll probably get him back in a second. What else are we talking about today?
A little Hedron Icosa stuff.
Hedron Icosa.
Yep. Let's see what else. Little Tetra. I got some updates I'll give you guys on that. I'll recap what's been going on there. And probably answering your guys' questions if you have any. But yeah, I'm glad to be back, man. It's been a minute. Lots been happening. And can you believe it's our 11th episode, man? We've been doing this for a while now. Like
coming on 3 months, I think, right? Or
more than that, dude.
February?
If we did it every other week, and then we've had more weeks in between, but if it's every other week, 11, that's 22 weeks, basically.
Red Squirrel, Tetra. Yeah, so I heard that. Aren't they coming out with the actual contract soon? Like in terms of like next week?
See. Let me pull up the official announcement from Stu. Okay, so he said website this weekend is going to happen 100%, he said. So, and then staking date will be announced well in advance with a nice twist for those that want to hold. Everyone will have plenty of notice. There are also more than enough rewards for what will be a short and sweet staking period. And then it looks like this is what it's been taking up his time recently because he says, I can't wait to get back to work on finishing Tetra next week. So it looks like they're might be in the final stages of development, and he's looking to push it out once he gets all this other stuff out.
Sounds good. Sounds good. So the price sure needs something because it's on a decline.
Well, hey, so I will say this. So the Tetra, they did their migration, right? So they had the Ethereum token in ERC-20, but that was not the actual token. That was more like a receipt. So they moved over to PulseChain. The ERC-20 version is nothing. It's vaporware, and the PulseChain token is the actual one you can stake for the Tetra contract. And so everybody who held Tetra on Ethereum when they pulled their liquidity got a 1-for-1 copy on PulseChain. And that the price that it's at now, even with the downturn, is almost a 2x, if not a 2x away from the price that they pulled the liquidity at. So if you held through that fork, you basically got a 70% to 100% boost in your underlying value.
Red Squirrel says that we're having a shark exiting at the moment. I'm probably on Tetra, I'm assuming.
Yeah, that's good to know.
Yeah, I mean, the price actually recovered quite well overnight or a couple days worth here. It's been up 25%. Now it's on a retracement, so he must still be unloading. She must be unloading still, but it broke resistance, so it's looking pretty good.
Yep. So I'm excited. I'm really excited for when the contract comes out. And at this point, pretty much you accumulate if you believe that the contract is going to do well and earn a decent amount of fees. That's kind of what you're speculating on right now.
All right. So do you want to drop some info on what's going on with the HSI auctions?
Yeah, I think that's a good idea. So let me pull up my stuff. So yeah, the HSI auctions lately have been pretty dry, and you kind of see that a bit reflected in like the yield going down. So I haven't been one to always like track day by day what the yield is for like your Hedron and Icosa stakes, but just generally, the HSI volume in the auction house has been going down, which means the yield has been going down. Now, that's okay. That just means we're like in a lower inflationary period, but there's just less yield for us. So today I went through the auction house just to kind of see what's going on. And let's see, what am I on? Am I on PulseChain right now? Yeah, so we'll do PulseChain first. And just a brief overview of what I'm seeing. There's 1,815 HSIs that are in queue to be started later. So this isn't a backlog. These are HSIs that aren't able to be started yet that will start soon. So here it's like this one that's what is this 1.5 T shares you can start tomorrow, and then there are 3 active ones right now, ending in 4 to 5 hours. So you'll see if the discount holds through that time. The 2 websites I use obviously are app.icosa.pro and then hedron.today. I usually use Hex model, but I had some trouble loading it today. Usually the HSI auction tab is a really good one to figure out what's been going on, but it wasn't loading for me earlier this morning. But Hedron.today is really nice because you have a filter option. So what I would do is I go to the liquidation tab, and then the minimum shares, I like to see if there's anything over 10 first, because those are kind of really the juicy ones, anything over 10. And what I saw that's really interesting for you guys to note is that coming up in about 12 to 14 days, we have these larger, T-shares coming out, 64, 64, and then we have like a whole boatload of 50 coming out in 13 days. So we're about to see an uptick in volume going through the HSI auctions, another potential day to get some really good deals. I mean, we're still going. This is 6, 9, 12, 15, 18, 21. Yeah, so over 20. And I mean, this is coming out in 23 days, but starting in 2 weeks, we're going to have a consistent stream of 50 T-share HSIs coming out. So if you want to snag up some cheap T-shares, that's going to be coming up in 2 weeks, and then some are trickling in before that as well.
So we got a question. So Greenwall's asking, still trying to figure out what the HSI auctions are and how they work. By the way, I upped my volume. Just let me know if it's blowing your ears out or what's going on that end. But
sounds so good to me.
Okay, and so the gist here is, what up, Crispy? Welcome back.
Big man.
Welcome. Thanks.
So the HSI auctions, simple thing is you can acquire Hedron off the market, or you can get it from old stakes. So in case, this probably isn't you in this case. You can go to the market and you can get these Hedrons, which are trading at a super low price. And so because these Hedrons are such a cheap asset right now, you can go take them into the HSI auctions on this page here. Scroll down here and you can take action on these and start to bid. You pay a small gas fee and you bid with Hedron, and then if you win the auction, obviously they get competed for and against, right? And then so at the end you may win a T-share or a bunch of T-shares for huge discount, because you're getting the dollar value of what you're putting in terms of the Hedron is way less than the actual value of the hex inside of the stakes plus future mintable hex. So
yeah, just for reference, there was a time where there was like 150 T-share auctions, T-share HSIs going for sale at once, and people got like up to 90% discounts on T-shares, just in the chaos of all that. Like 50 T-shares went for like 1.8 billion Hedron, which at that time was like a little bit over $1,000, and they got 50 T-shares for that. And I know there are people in your group that like really made out that day. So a lot of opportunity exists in these auctions, Greenwall. And if you need to know more, go onto my channel and go to my ICOSA overview video, my ICOSA 101 video, and have all that information there.
yes.
And then this is just the Ethereum side. So on the Ethereum side, we actually do have a backlog of HSIs that can be started now. But I went through all of these, and they're all under 1 T-share. So all the ones that are in backlog are essentially just junk HSIs that have no value, that aren't even worth the gas to start at this point. So they're essentially on Ethereum is no more backlog anymore. But if we look at the liquidations and we go again to like a 10 T-share minimum, we'll see that we have more coming out sooner. Like we have in a week 143 here, 63.32, but also at the same time, because the PulseChain is a copy of Hex of Ethereum, we see a large number of 50 T-shares coming out that day too. So there's going to be double the amount of auctions, half on Ethereum, half on PulseChain in 2 weeks, and then like every couple days there's a trickle of more 50 T-shares coming out as well. So the yield's going to go up and the opportunity is going to go up pretty soon. So,
So I know personally that there's a bunch of people that are interested in and have been actually actively participating in the auctions because of the deals that they're getting.
Yep.
People that are DCAing onto the Ethereum side, for example, that they can get like 50 T-shares for the 80-90% off. Like they're doing it, they're actively participating, but there's not a lot of competition over there right now because people's attention is diverted in so many different directions. And so you might as well take the opportunity. That's why we're presenting it here today, is because it really is a chance to get something of a tremendous value in the long term for relatively cheap now. And I'm sure, Crispy Man, you've probably done some data on that, or, I know you have. You've been paying attention to the HSI auctions for a while now. I don't know if you had anything else you wanted to comment on that front.
Yeah, I have. Well, yeah, do your research on it if you're going to go into it. It does appear right now that if you were to pick up Hedron in preparation for that, and who knows what'll happen in the auctions, you get it pretty cheap, right? And then in the auctions, what I would say is go take a look at what you think or what you've seen them go for in the past. Like I use 110 million Hedron per T-share as a thumb rule, right? And that's kind of like market price. And we did see 80% discounts last time big ones like this came through. I don't know if that'll happen again. But if you use that kind of a thumb rule, that 100 million, 110 million per T-share, multiply that out, that gives you an idea of the kind of the kind of Hedron that you might be looking at to obtain those.
That's right? A $30 to $40 T-share for those of you who didn't want to do the math quickly. Which is, I think, what are they going for right now? $250 to $300 on Ethereum, roughly.
Yeah.
Yep.
Yeah.
So huge discounts over there.
Now, one thing to keep in.
Yeah.
Oh, yeah, I'll answer that real quick. Just on what you said before, one thing to keep in mind: all of these HSIs are 15-year stakes, so it's like they're like there's a third of the hex in there for the same number of T-shares that like a 1-year stake would have. For Hexagon Army, how do you receive the T-shares after winning? There's a button when you win. So if you go to, I'll pull up my screen again. So especially, yeah, go ahead.
Go ahead.
Well, I personally like Hedron today a lot because it has all of these features. But if you get on this win-loss section, you'll be able to click like an actions button, and it'll say like claim your stake or like receive your stake, and then the contract it'll run a function to transfer the HSI to your wallet. That's all. And then you have the same thing in the actions on here. It'll say here instead of loss, if you're not a pleb like me and you actually won, in this actions, it'll say exit auction. And you can actually exit anybody's auctions. Like I can exit this right now if I want to and pay somebody's gas to send it to them. That's perfectly possible. Yeah.
What up, Brian Magruder? Huge shout out to Brian. He's been sending me all the cool new promotional hats, PulseChain Hex hats, and like cool swag. Really cool guy. Thank you for all your support, man. I know he's been just shipping out, helping the community any way he can. If you're going to be on the Pulse tour or you want access to some of that stuff, hit him up through the KSB or PulseChain Tour. There might be a way to get some of that merch through them.
Yeah.
There was a question about just Tetra here briefly. What is Tetra? Can you guys give a quick rundown?
Yep. Super easy, super simple. Tetra is just basically automating functions on the blockchain. So it's a drag and drop UI for scripting blockchain functions. So it's like think of it this way. Let's take hex staking. So like when you stake your hex, you have to run the stake function, and then you have to run the end stake function when it's over. So what you can do is automatically set a script in Tetra to start a stake and then end the stake when the time limit is up. And you can set like if-then statements for like, if the stake is done, then you run this function. And if it's not, then you don't run it. And then you can add more on top of that. Say you want to automatically sell the hex. So it's like it automatically stakes it, end stakes it, and then immediately sells it. And you can pick like percentages too. So you could say like sell 80% of it and then take 20% of it and compound it into a new stake, or 20% buy this other token and stake it. So it's like any time you click click like you run a function where you have to pay gas. Yeah, anytime you pay gas on a blockchain, Tetra can run that for you in the background, and you can combine as many different functions as you want. Yeah, that's what it is.
Yeah,
I think a good example. Yeah, go ahead, Crispy.
I was just going to throw out to everybody. I'm pretty bullish on the concept, right? And so, nothing negative about the Tetra at all that I know of. Need to see it come out and put it to use, but I would say a couple things with automation. You need to make sure you're testing your automation, and you need to really vet it out pretty good, so that like you don't want to. There are things that can happen in the on the blockchain that maybe you didn't anticipate, and you can drain your wallets by doing stuff that you didn't expect to do, and so probably just take it easy and slow as you get started with it if you're gonna use it. And like Sloth, I'm looking at it for some automation. Like I'd like to be able to earmark a certain amount of pulse to move into hex and just let it go, and just move, every DCA for me for a year.
Yeah, that's a DCA strategy is actually a good use case of Tetra. And so before I get into that, I'll preface it with like, I think when I hear not criticisms, but like most of the main conversation that even like I have around Tetra is like the basic combining different protocols together. But there's a lot of really cool use cases when you get creative with Tetra. And one of them is just what Crispy said, an automatic DCA wallet where you send X amount of dollars to this wallet, and literally in the background every day, let's say you send $1,000, every week it puts in $200 for 5 weeks, and then when it's done, you can send it to say your Vault wallet afterwards. So every time you get a payment, you can send that payment to that wallet, and it's auto DCAing for you, and then it's auto sending it to a safer wallet at the end, and you don't have to go and click all the buttons yourself anymore. It just does it in the background.
100%. Yeah.
Oh, you're muted.
Set contingencies in there so that you're actually, have scripts backing up other scripts so that they act as their own fail-safe. So
exactly.
If you don't know what we're talking about, it's probably not for you. It's definitely going to be a more advanced level blockchain DeFi kind of guy. It's going to be using that stuff out the rip. Let everyone else go make the mistakes, and then you just take. That's why
take the good ones. Yeah.
This is a great, because other people can write good scripts. They can be battle tested, and then you can adopt them. So it doesn't have to be something that you write yourself. Like
I plan to be one of the people writing scripts that hopefully, become popular.
Yeah, and I think compartmentalizing the scripts is probably a good thing too when you write them. Meaning, so I have some automation experience. The guy who, if you're working at a corporation, you suddenly get 1,000 emails. You're like, what the hell? And it's because, I loaded up some sort of automated script, right? And it's sending out emails, and it wasn't intentional, but you end up with multiple copies or something. So you just need to take it one step at a time and vet it out, because like I said, this software, as I've seen it so far, kind of plug and play, drag and drop. You're going to do a setup and configuration on it and let it go into the wild. And so more complex strategies will come over time for sure. I mean, some people will try to roll out with them immediately, but there's some. Anyways, I won't go into too much detail. But yeah, it should be a lot of fun. I like this kind of thing because I think
especially
there's
on a lot right? Because the cost to transact is going to be tremendously cheap. By the way, is my mic a little better now? It probably sounds way loud now. Huh? I turned off the automatic adjustment, so maybe it's a little better now.
Yeah, it's not loud. It's just
cutting in and out.
Yeah, it's kind of rough. That's all.
Not good.
Yeah, we should, when we get a little closer here. There's Sloth. Maybe you already are doing it. Probably should build a few more of these on testnet. See how they work and get them
play around.
Run up. But
and then I know. Go ahead.
I was just gonna say I'm not gonna be bleeding edge on this one. I'll be a step behind bleeding edge.
I'll be bleeding edge for you, buddy. I'll play because it's actually the perfect script, perfect protocol for me. Like somebody who the thing that I enjoy the most is like understanding complex systems and then putting them together in either efficient or inefficient ways. And so this is a great thing for me, especially me as somebody who's not a proficient developer. Like I have some basic Python knowledge, but like the drag and drop, no code UI kind of thing is going to be really beneficial for someone like me. There's one more thing I wanted to say. What was it? And just we did. That's what the protocol does. The Tetra token earns the fees generated by the protocol. So with every time you run an automated function through Tetra, there's like I believe a 0.5% fee to the amount of money that you're moving, and that gets distributed to all of the Tetra stakers.
All right, how's that? A little better?
Much better.
All right, so bunch of good commentary here. So let's see, our 15-year stakes too risky, and we're referring to 15-year hex stakes. I love this question. I think it's a really good question. And now you have to ask it, you know, what chain are we talking about? Are we talking about a 15-year stake on ETH, or are we talking about one on PulseChain? Because there's a difference, right? Mm-hmm. So some things to think about. You know, what is too risky? In my mind, there's risks inherent when you're locking your money up anywhere. The first would be on Ethereum. If you're not holding like 2 Ethereum, like if you don't have the money for 2 Ethereum to sit in a wallet somewhere to use for gas in the future, then you're already starting out on a bad foundation. So you are going to do like a super long-term stake, and you're not going to use something like the Maximus DAO, or you're not going to encapsulate a stake with Hedron, which those are options as well that kind of mitigate the risk of gas costs long-term. Then yeah, on the Ethereum side, they can be risky. But I have like a example here of like what the payout would be potentially if you did do that. So let's see here. Hopefully you can see this. Like this is basically assuming that you took $1,000 and you staked it for 15 years. And if the price of Hex on Ethereum only went to 5.5 cents again, your total value of that at the end of the 15 years on this kind of growth path for daily payouts would push you around 42,000 US. Is that worth, is a 40x worth the risk of holding a 15-year stake? Especially if you're not a trader type, I think so. But is it necessary? Maybe not. And you got to think too that, you know, in any event that gas fees gets reduced on Ethereum, which then also works for PulseChain, or maybe you're planning on doing this on PulseChain, then the gas isn't really that much of a risk. So the risk of a failure of the Hex contract is almost as close to zero as any cryptocurrency contract that exists.
Only catastrophic infrastructure failures would make it fail, basically.
Right. The realist risk in this whole thing is if the majority holder of the Hex supply were to be hacked, or their coins were to be taken and sold on market. Right. That would be like the main choke point, I guess, of the Hex would be if that were to occur. And I just don't think that that's a very likely outcome, but that is a possibility. So, you know, in terms of returns that you're seeing very conservatively, like the payouts there, and if you held a couple of Ethereum now, then you have enough to liberate that stake when that stake matures. So I'd say it's really not that risky to stake Hex for 15 years, but that everybody's strategy is going to be a little bit different.
I would say my answer to that question is it's too risky not to have a 15-year stake. I'm not saying, you know, throw your whole bag out 15 years, but like if you're investing in Hex, at least to some degree, well, I guess there are 2 reasons why you would invest in Hex. One, you believe in the fundamental value proposition of the T-share, right? So you believe it's a mechanism that will shore up supply and defer inflation sufficiently so that any buy pressure coming in moves up the price exponentially over time. And then the other reason why you would want to do it is to speculate that like Richard Hart will pump it, basically. But like for the people like me, and I think I also speak for you guys who believe in that fundamental value proposition of the smart contract, right? Once you accept that premise, it only makes sense to have 15-year T-shares at least a little bit, even if it's like 1 to 5% of your whole portfolio, because you are maximizing the value of the system for the most amount of time. You're capturing the most amount of value you can within the smart contract for the smallest amount of money. And you're hedging yourself against the fact that you're hedging yourself for the maximum upside possibility that this thing goes absolutely crazy because of those underlying pumpamentals that Richard Hart talks about.
Yeah. Baseline, you're going to want to do 10,000 hex or more. And at these
Yep.
prices, you should be able to do more, I think. Yeah.
Yep.
If you can't, then maybe this isn't the type of investment you're looking for. And
Yep.
Crispy Man, if you want to show any data about kind of the divergence from the two chains in terms of T-share participation, or like you know, what a 15-year stakes estimated for APR and stuff, that'd be cool.
Okay. Yeah, I got about 500 charts.
And I'll say,
get those bitches filed.
Yeah, I'll tell you this. Here's some great alpha for you. Let me drop this here. Right. Quite often, I am accosted with price appreciation is greater than yield equation, right? And I finally came up with the best comeback I could come up with, which is price appreciation plus yield is greater than just simply price appreciation, right? I know it's oversimplified. Hey, listen, nobody can dispute 15 years is a long time, right? And now we're not even talking about 15 anymore. We're talking about 12, 13, 14. If you're moving into the future, you're looking at 16, 17, 20. I think you absolutely have to evaluate the risk differently for 15 years from now. And whatever you do needs to be matching up with whatever it is your strategy is. But here's the thing, right? Like there's people all the time that, like, I'm seeing a huge wave of people that are like, I'm out in 24, man. I'm just out. I'm out of crypto forever. Okay, I get that. Maybe that's what they're going to do. Maybe they're going to make it. Most people don't make it that way, though. You know, it's kind of tough. So you really, this whole delayed gratification, long time frames is really what does it. Like I could have been an early adopter of Bitcoin, and I'm going to be out in 2012. Well, how would that have worked out for me, right? And so then I would have missed the other 11 years of upside, right? So anyways, but I guess what I'm getting at is, yeah, I mean, no, I wouldn't say go mortgage your house and go put it out 15 years, but you could do a scratcher, you know, I mean, you do a T-share, you throw it out 15 years every year in the future, kind of like what Axis is saying, and, or it'd be a little bit more than that, maybe it's 5 T-shares or whatever, but, you could do some good stuff in the long run, right? I mean, particularly if things take off, you got to take care of your mid and short term.
I think we're all acting on the presumption that Hex is going to make floor prices, even if, let's just not even go to the point where they beat the all-time high for Hex. Even if they just go up by a factor of 10 or 20 times and they create a floor there, then we're in a position there where it will have been worth the extra yield because it's magnifying the outcome of your yield.
Yeah.
And the way that looks, as you're going to see here, I mean, we're talking hundreds of percent that you're going to get in coins. Look at 394% that you're going to get in coins, and then you got to multiply that by the factor of the X's that the coin does from 0.8 of a cent hex to whatever it goes to in the future, right?
Yeah, price wise, because it could be different price. And we do expect these to change, and I do expect them to float up upwards because of payout and the whole functionality of, as Benny was saying in the chat, the fact that we have fewer and fewer T-shares over time because of the cost of T-shares over time. And this is just a quick estimate right now that I have up here that's just showing we do see a difference on the chains. But, you know, you out 15.2 years, Quattro Cinco, you know, you could be looking anywhere from 390% ROI, like you were saying, to 394% ROI, which is a pretty huge return. And if that's compounded with price appreciation, it could be a very good deal. So it all depends on what your strategy is and how far you want to go out. And like we were talking about HSIs, like I don't buy an HSI unless I'm willing to wait 15 years for it.
Yeah.
That's my mental.
Yeah, that's a good mental framework to sit on, right? That way you're not in a position where you have to have the price do a certain thing to sell it short of that 15 years. You should always be buying like Maxi, Deci, those things with the thought of I'm going to hold until maturity. And then if it does some amazing thing along the way, then you can get rid of a portion of your stack, right?
Mm-hmm.
Yeah. Yep. Yeah, go ahead, Sloth. I got a funny thing to say in a second.
Let me think. There's a couple things I wanted to say about that. Okay, so the first one is that, like, in my opinion, staking hex is fundamentally an what's the word I'm looking for? Optimistic behavior. Like you're, because you never stake hex for the yield that it's producing today. Like the APY that you get at the current prices for the amount of money you put in really isn't like that crazy. It's not like life-changing money, and like it's not life-changing yield, and like the volatility risk of the asset makes it not necessarily worth it. But if you calculate higher prices in the future, it all of a sudden makes it worth it to do those specific stakes, even rolling stakes. So and I think we saw this a lot with the early hexicans, the OGs who staked early. They weren't doing it for the yield that they were producing day to day, because they were getting like 4 hex per T share, and the hex was less than a penny. So like each T share was producing like 2 cents, 1 penny, if you were lucky. They were staking because of the belief of what it could do in the future, and then they see that the volume that they're doing it today would produce high yield and high passive income in the future. So when you're staking hex, or even when you're buying hex, you really have to have a mindset where that it's not going to pay off until a later date where the yield starts making sense at a higher price. The other, I'll just say one more thing. The other thing I want to say, and this is something I'll talk in my fundamentals course, is that staking, like it's the difference you were saying, Crispy, basically between market cycle stakes and just like long stakes, where it's like I'm getting out at this date because it's going to be the market top, and I'm selling so I can buy back in later. And that makes sense. And on the surface, that's a better decision than doing a long-term stake, because the amount of hex you'll be getting by selling around the top and buying near the bottom is going to be more than the yield you produce in that same amount of time by just staking hex. But the thing that staking hex has an advantage over the trading strategy, just for lack of a better term, is that it reduces something that I call decision fatigue, where you have to make the decision to stake a hex for a certain amount of time, be right about that, make a decision to sell, and then the hardest decision after that is making the decision to buy back in, because now you need to have another calculation of the future probability that hex is going to go up again. While when you just make one stake long term, you do all of those decision makings in one, and then you wait for it to come later. And I think
really like this comment.
Yep, that's another thing I wanted to bring up too.
Like,
yeah,
this is literally something that is existing outside of just the crypto ecosystem, that is it's extra leverage that you get to have in the real world in a bull market where assets go up in price. Of course, you can use liquid loans and other, on-chain DeFi to do the same. But just if you have like a lion's share of the supply of something, and you're gonna have you can collateralize it, and it even drops 90%, you still have like millions in US dollars that's worth collateralizing at the up 10% of the stack at the highs, for example.
Same for what's too. What's I think are going to be like premium collateral for decentralized loans.
Crispy, did you have one more thing you wanted to add?
Yeah, I just throw this out there, and kind of goes to your point, Sloth. You can't go back in time. Maybe one of you guys will design some sort of freaking time machine, the Tesla time machine or whatever, but right now you can't go back in time. And so my little FOMO problem is that, yeah, I made stakes in 2019, 2020, and man, do I like the fact that they're producing 60% APY, right? And that's not a joke, right? I mean, there are stakes that are doing that. I cannot go buy one of those now. I can't get one now. Even HSIs didn't exist then, right? So you can't go back in time and get them. And so 15 years from now, you can't decide, oh, it was a great idea to have done this, and go back in time. Maybe you buy some HSIs, but they're going to be at a premium if that was the case. So the only way you can really do it is by doing it now, and getting in for a small amount. Now, we've all seen the action on all the E-HEX, P-HEX stuff, and damn it, for all the people who think we're wrong, please go get out of your position. I would never, no, seriously, I wish I could say to everybody, listen, if you don't believe in E-HEX, just emergency end stake, leave the rest of us alone, because it'd be fun. But I think they're valuable enough that I would never tell anybody that, right? But you got to make your own decisions. But we certainly haven't seen the capitulation in stakers, right? So we did. I mean, we did see some, but I mean, would we go? We went down 100,000 T shares, big deal. We're sitting at virtually the same number of T shares both chains. So user base hasn't decided. The miner base hasn't decided anything yet.
Yeah, and so the last thing we'll talk about in this whole commentary around 15-year stakes is just how big of a difference that 4.1% could actually end up being. Most, you're even the best treasury bonds right now with the inverted yield curve are paying like 4 to 5%, and that's like historically crazy high. You go to a savings account in a bank, you're not going to be getting that amount. The bank might be making that, but you're not making that. So I just like to think of that 4%, and then multiply that like by like a potential 20x, right? And just think about how much extra that could actually be over a 15-year time frame, cumulative. So very powerful charts. Thank you for bringing those up, sir. And I'm just going to rifle through some of these other comments. Yeah, Sloth, if you want to say something quick, and then I'm going to go through a bunch of questions that we had here.
Nope, I think I talked enough just now. we can keep going.
So the question here was, do Hedron and PI have the same upside potential as the ETH versions? We're going to get into the charts in a minute. We'll come back to that, all right? And I do think that they of course they do. They both have tremendous upside.
Would you say higher? Maybe higher.
The PulseChain side, it's showing right now. The PulseChain side is showing that it's going to go higher faster than the ETH side. Is there some rubber banding effect or some other fundamental event or thing that can occur that can actually make that not true? Yes. So we can talk about that in a little bit. Is there extra risk to stake HEX on Hedron? Technically, there's extra contract risk because you're going from what was the base code and you're adding a little bit more code. But
yeah, he's talking about HSIs.
Yeah, HSIs they're. I mean, technically, there's added risk because it's more code, but I would say that, and in reality, there's really not that much extra risk. It's been pretty proven now, battle tested, and been working flawlessly for over a year now. So I would say very limited risk on that in terms of a technical failure. Just a quick comment from Jay. He said, Wrap BTC is recovering, and I can't wait to dive into that in a minute as well when we're going through the charts about how, what we were saying about LP on V1 versus V2 on PulseX, and how V1 is the demand driver, like the driver's seat for the administrators of PulseX, where they can do two things that will kill two birds with one stone. They can buy and burn more PulseX, which makes the ecosystem rare and more expensive, while also, utilizing the popular tokens or driving demand for tokens to chase the yield that you're getting from the V1 ink farms. And with that comment, this is a comment I wanted to address earlier, which was, could we explain a little better how rewards work for the V2 farming? So in V1, you're getting just ink. And because you're participating in the V1 farms, you're kind of pumping everybody's bags together because you're providing liquidity for those main core 8 pairs, which would be PulseX, Pulse versus stablecoins of 3 of different varieties, Pulse versus wrapped ETH from Ethereum, and then Pulse and PulseX versus ink, and Pulse versus HEX. So that's the core Richard Hart tokens paired up against stablecoins, right? To try to give the ecosystem value that way. And then because that's where all the value is being extracted and put through, you're actually buying and burning through the contract code function of PulseX buy and burn 4 times what was originally designed to do. So that what that does is it makes it more rare and gives a more of a pumpamental nature to the whole ecosystem by its binded liquidity. And then in the case of V2 is just paying you out, I think it's 0.27% in fees. So as prices of assets go up, the market caps go up, we'll take any of them, Pulse, we'll just use Hedron, Icosa. As the valuations of those assets goes up, it gets more valuable. So then that means that your fees are getting better because you're earning fees in Hedron. So your APRs goes up and down relative to the performance of the token, but you're losing the token that's going up in value at the same time, which is why it's important that in the V2 pool is you're providing in crypto to crypto pairs. Like you don't want to do crypto versus stablecoin in the V2 or less you risk more in permanent loss potentially. Whereas like if you could get into two cryptos, like let's say you put in Hedron and Icosa into a pool, well then they're both going to kind of rise and fall together. So you're going to earn more of these assets. And then when you go to pull the liquidity, when the asset values are higher, you're gonna have more APR, and when asset values are lower, you're gonna have less APR, but you will still have maintained a relatively steady amount of yield relative to the amount of volume that's getting pushed through that pair.
Yep.
What else here? What do we got? Hey, you guys, what's your view on the Maxi tokens, DESI in particular, being so discounted at the moment? I think it's a missed opportunity. I think if you can get it, and it's liquid, I think DESI might be one of the more liquid things in the pool. I haven't checked them in a while in terms of what's available for purchase, but with the addition of this new DEX called PHUX, it's giving more value to things like the Maxi tokens or the icosahedron protocol, because now you're able to use this fork of balancer, which you can put more than one thing or two assets in a pair. You can put any amount of assets in a pair and then delineate them so that you can, as the pool designer, you can design ratios of coins that makes more sense, so that the coin that's more volume and more liquid, you can harness the power of the volume getting pushed through that coin and not risk so much impermanent loss on the more exotic coin, for example. I guess there's a lot of anything else you guys want to comment in that regard, and then maybe touch back on the Maxi tokens.
Yeah, I'll talk about that, because actually talking about the Maximus DAO ecosystem and their tokens with like what fucks the balancer forks add to it is a really good way to exemplify both of the power of both of those ecosystems. And so like the problem with the Maximus DAO ecosystem, well, you can spin it as a problem and you can spin it as not a problem or a benefit. The fact of the matter is that because there are so many coins for all of these different stake lengths, it requires a lot more liquidity or backing liquidity. What I mean by that is like Stablecoins, HEX, ETH, Wrap BTC, anything that like you want to exit into, it requires a lot more of those tokens if you're purely in a V2 or even like a V3 system in Uniswap V2 or V3 system, because well, for PulseX at the very least, you need 50-50 backing. So if you want $10,000 of liquidity, you need 5,000 stable coins or $5,000 worth of ETH or $5,000 worth of Pulse, right? And so if you have 5 tokens. If you have 5 tokens and you want each of them to have $100,000 of liquidity, well, you need $500,000, or no, you need $250,000 worth of backing liquidity to make sure that there's sufficient liquidity for people to enter and exit to. And if you don't have that, then there becomes high slippage and it becomes harder to enter or exit, which generally can be spun as not a good thing. With the balancer fork in Fux, you can pool all of those tokens together to share the same amount of liquidity, and that way everything shares less backing liquidity overall, decreasing the slippage between the assets, but also between entering and exiting. So it makes with the same amount of money, you have more efficient order execution by pooling all the tokens together in the same liquidity pool and backing it by the same amount of dollar value. And that's the Maximus perps. I think those really shine on the PHUX DEX the most. And then the next one would be like Alex's stuff, the Hedron Icosa stuff.
Yeah, I think.
Yeah, go ahead.
I was just going to say, I'll throw on to that. Aside from the liquidity, having liquidity maybe to support trading and swapping back and forth, I think people are just exhausted, right? I mean, there are just so many different shiny things that people think are going to moon tomorrow that they're not necessarily thinking about. Well, what will DESI do for me 10 years from now or 8 years from now? What is Maxi going to do for me in 14 years, right? Because they're also seeing that liquidity issue, right? Now, later on, assuming we get into a bullish market, and you see lots of people doing lots of different things. People, of course, going to be pumping those up and buying them, and it might even be more liquidity. But at the moment, we just don't have enough attention to do everything. So that actually provides a really big opportunity for DESI people and Maxi people that might want to get more of those, and even like. And here's the thing. I'm sorry, I don't have the answer to this one. Axis, you might know how DESI works. I guess there's an auto roll feature with DESI, and so it's like almost like a no-brainer, man, to get into it if you're willing to wait 10 years, assuming that for some reason there's not there's not the liquidity to do actions in the meantime, or just not favorable liquidity, right? Let's put it that way. And so so people could be in DESI and just roll indefinitely,
Yeah, and it's a way to de-risk from any fear of not having the gas money, and if that's a fear of yours.
Yeah.
So there's that. I mean, I think that there's enough good things between being able to do these to de-risk from gas fees, and eventually the gas fees getting solved with an 8x reduction potentially as early as next year. So it's really going to create like a very exciting and interesting opportunity for people that have eyes to see.
And then real quick, bringing it back to the question we had earlier about like, is it worth having a 15-year stake and like staking ladders and stuff? If you provide liquidity in the Maximus Perps Maxi pool in PHUX, you essentially hold a single token that you can earn fees on, and an incentive token, the PHUX token, while also basically by owning that LP token, you are owning a staking ladder, which is pretty cool. So that's another route for you, Beggy, to consider. There's another element to consider when it comes to like long-term staking, like how you can get exposure to that yield.
Yeah, and there was one other thing I wanted to say in regards to DESI. So I do envision a world where like let's say with what we're seeing with HEX on Pulse right now, like it's overperforming everything by such a huge margin. It's really kind of acting like the Bitcoin of the Richard Heart ecosystem, and it's performing first and the hardest. And if that trend continues, then there could be a time in the future where HEX on PulseChain just is so overvalued and so overbought relative to all of the perps, Hedron, ICOSA, HSIs, that the cup starts to get so full that money starts to overflow to seek other opportunities in less liquid, but still tied to HEX environments. So that would be all of the things I just mentioned. And so what that would look like is like HEX goes to multiple dollar targets, but yet you can still get the perps or the HSIs for still like 50% off or 75% off. And so there will be a flood of money out of all of those mad gains from the expensive HEX into the less expensive HEXs, which are just derivatives and perpetuals.
Yeah.
And that's called speculative mania, and that happens in the bull run.
And that what exactly you're talking about is kind of my thesis or my hypothesis. Also, what's going to happen with Hedron and ICOSA, where you can derive their value in HEX terms and in T-share terms. And so when that thing gets so far away, the delta between how much exposure you can get with Hedron and ICOSA relative to what you can get just buying HEX is just going to not force people, but incentivize people so much that they're just going to go that way. New money is going to go in that way. And then also that's the counter argument for what the criticism of there are too many tokens, and that means everything is too heavy. Right. So it's like if there's just one thing and that thing goes up so much, well, then people become disincentivized to put more money in because it's gone up so much. But when you have all these other things where people can like get more of it and get a bigger amount of exposure to the base thing that's gone up, then that probably, at least I think, if I'm correct about this, will get more new money in because there's more things to speculate on, and there's more things to speculate on that are derived from the exact same thing of value. Right, so it's like all these tentacles go out from the main thing, which is HEX and the T-share, that are bringing money in, and because all of them are bonded in liquidity to each other, they're all sharing that underlying value together, making even the thing that the money isn't being put into directly more valuable as well.
All right, next question.
One moon.
Yeah, no, that's definitely in there.
now.
Quick answer for this one. Can Tetra be programmed to auto buy as soon as a certain contract launches?
My
answer.
Yeah,
Yeah, go ahead.
go ahead. I was going to say my answer, because I heard that Stu answer this. Or not Stu, Neil. You have to have the contract number. If you have the contract number, then that's a possibility.
Yep, that was my answer too.
Woohoo! I got one right.
When Gnosis safe compatibility for PulseChain Hedron Minting, sirs? Don't know.
Well, the Liquid Loans guys did they did bridge aversion. They focused specifically on what they needed to do to accomplish liquid loans. And I don't have any of the technical details about that, but I did hear some talk. I think maybe it was Walrus, saying, hey, if somebody needs some help with that, contact them. But somebody would have to make it work, right, to do that.
Kind of like a more legacy question. The government may make it harder to trade in crypto 15 years from now. I like this question because it's like a lot of people like to use the clickbait name of, CBDCs run. But I think more of what people are really concerned with is capital controls. And unless we come under a global new world order government run by one singular force or entity, I don't really see a world where American citizens' rights to the using their money for their own reasons is actually going to be implemented. Yeah, I mean, I guess if you're on the side of it's going to get harder to trade in crypto in 15 years from now, it's under the assumption that the world looks radically different than it does now. Not that it can't, but you basically want to be, if you are concerned about something like that, then you want to be the head of the curve and go to a place, you want to reside in a place that doesn't have the same fail point.
But if you take a little step back from that, and not specific to like your location, but just like the general concern, let's change that number from 15 to 13. And I was watching the Netflix today. I said, I saw that movie. It was 2010. It made me think about, Bitcoin being out around 2010. And you know what? In 2010, people were saying the same thing about Bitcoin. I don't know what I'll be able to do with that in the future. So here we are 13 years later, and you can do more with Bitcoin than you ever could before.
Yep, and the United States is in the face of the global economy, but the U.S. in general is just in the face of like some of the biggest financial adversity it's ever been in. Our debt to GDP is at like all-time highs, and it makes more sense for the government to just, instead of killing crypto, which they could have done 10 times over already, they need to just nourish it in the way that they still can have some control or some monitoring capabilities over like the taxation of it. So they can use it as a cash cow versus like try to kill it off. So like more likely, if you're talking about like getting away with not paying taxes or like some other form of, they're going to get their claws in it to some degree in terms of if you're going to come back into the fiat system or come in and out. But inside of crypto itself, I don't see how it could be shut down or stopped or slowed or anything. It's just it's not financially smart to do that. All right. Let's see. Okay, so let's get in some charts. What are your buy zones for Pulse and PulseX? Well, we were there already, and now it's a waiting game. Let's see here. So let's see. Let's look at some Pulse charts. So PulseChain has been trending up for 25 days already. Off the lows. That low actually hit the 618. Exactly on a double bottom. So bottom number 1, bottom number 2. Got a nice push off that level to reclaim the SAC price with the base rate. Then there was some oscillation around there, and what was previously resistance was once again resistance, and then we even fell short of that here, and then there was like a sell-off, but it wasn't too harsh of a sell-off, like obviously not like back here. So that was already showing a weakening of the trend. These candle sizes are much smaller than these candle sizes back here. This was getting pushed down with force. and this is just like profit taking or like smaller moves. So and then also on here I have for you the 21-day moving average. And I had a question on this on Twitter. It was like, bro, you're on the 4-hour chart and that's a 21-day. Yeah, so if you just multiply the 21 times 6, because 4 hours goes into 24 hours 6 times, that equals 1 bar. And then this is just a moving average. So you can actually get like the 21 daily bull market support band on any time frame. You just have to calculate it out, right? And adjust some variables. So anyways, the importance of the 21 daily moving average is if the price bounces off that level, like here it failed to hold and then became resistance, but then we started to recover and now we've gotten back above it. So now the more bounces we get off that level, the 21-day will start to try to chase the price. And then you want to see that continue to hold. That means that we're in a bullish trend. And that's why I have it here, is because it acted as a clean resistance here. And then we broke it, fell back through. We oscillated around the SAC price here. Now we oscillating around the 21-day here. Now we're above it. So we're both above the 21-day, which is important, and we're above the SAC price. So if this continues to hold over the next, let's say 30 days, and we don't break below SAC price and below that and hold the 21 as resistance and fall below the support line here and get rejected off that, that's a lot of ands. If that stuff doesn't happen, there's a lot of support below us is what I'm trying to say. So if that stuff doesn't happen, PulseChain's looking pretty good. And the chart that's really telling me that the ecosystem as a whole is looking good is this chart here, which is PulseX versus Pulse. So we all know how important PulseX is in terms of its role in the underlying pumpamentals of the contract of the ecosystem because of the buy and burn and the V1 pools. So PulseX, when it starts to overperform Pulse, that's a good sign because it means that more PulseX is going to be held up in smart money hands, and more PulseX is getting bought and burnt, making it more scarce, which is like perpetually pushing the price of all of the assets up. Because this is one of the thickest pairs, probably the thickest pair on all of PulseChain is PulseChain tied to PulseX by a matter of $35 million, as a matter of fact. And that's the dollar terms. And then obviously as one increases in price, both increase in price, so they actually compound the overall valuations of the network as a whole. So the what I'm seeing on terms of this is really good. So we had the initial range here when the thing launched, and there wasn't a lot of volume because obviously there was low liquidity. And then as liquidity came into the system, we had this explosive move on PulseX. PulseX went from like a 4-to-1 ratio down here to a 2-to-1 ratio up here. And then E-HEX listed PulseChain here. And also the bridge became unclogged at the same time 2 days prior. And so that kind of marked the top in terms of what we were going to see in the short term. So then PulseX, Pulse pair ended up in this range where we were just range bound. But the turning point here in terms of being stuck inside this range was when this resistance continued to be respected. So which was resistance, 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 then was also respected here after many attempts and failed attempts. We had 1, 2, 3, 4, 5, 6 8-hour candles in a row of trying to push through this resistance level, and we just couldn't do it. And then you had the big candle print. This is a bearish engulfing candle. It is outsized, so it engulfed the previous 6 candles. That was a sign that we had broken the midline of the range. We held resistance for 6 consecutive candles. You had the bearish engulfing, and then this little sideways broadening wedge. I know it's tiny, but it's in there, and which is it's like a bear flag, and then the breakdown. And so there was plenty of signs in the technicals here that this was going to break down further. Now the question then became, all right, are we gonna hold the bottom of this range, which was here is where we kicked off hard and went up another leg. That's where you found the bottom of this channel. Same with this wick low within a margin of error. We tried to hold it. We had this candle print here, which was looking optimistic. But once again, in the same way that resistance was respected here, 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 we created a new downtrend resistance line here with this one, and then the second one here, and that became resistance for us here at that range lows, which then got us that huge overperformance to the downside, capitulation lows, and then PulseX finally hit the lows here, which was the 618. So if you run a Fibonacci analysis on this from wick low to wick low, wick high to wick low, this level here is the 618, which is a key level when you're doing technical analysis, where you sometimes will see support. Which catching support on the 618 on a new asset like this early on in its life cycle is actually extremely bullish. So looking at it from the outside in, like even if you were just a TA guy and you didn't even have any um, incentive to want for this thing to succeed, you'd see this kind of consolidation here where they created this structure above the 618 where it was a pennant, and then this attempted breakthrough failure, and then a second candle to follow up through a day later. That's super bullish, you guys. So we're trying to reclaim in terms of PulseX Pulse pair. It's trying to reclaim the range lows here, of which was previously support. And if it does that, we're going to go up and test this red line and as resistance. Any kind of price action that gets trapped in here is going to end up in a price squeeze, either a breakout, retest, and resumption off that level, or a breakdown, retest, and resumption lower to test our trend line here, which will be much higher, which would equate to that 0.33 PulseX per pulse level, where I would anticipate we find some sort of support. So things are looking good in terms of the PulseX and Pulse pair. Pulse itself is looking tremendously good, holding above sac rate. PulseX is testing the 0.5 fib level, and it got above its 21-day. It was more extended lower from the 21-day than PulseChain was. You can see here we didn't have any touch of it here, 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 here. There was no touch of the 21, but time allowed the 21-day to get low enough that we could, with a quick thrust, get above and start to try to hold this as support. Again, here on the Pulse chain, it did touch the 21-day here, 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 which just meant that Pulse was performing better or overperforming the performance of PulseX. And then to take that a step further, ink is a huge part of this equation as well. So incentive kind of got decimated. I can't say it any other way. It got giga trapped underneath resistance, and then it tried to break. It got a breakout, and then it got giga trapped again below resistance. And there was like a pretty harsh rejection off those $80 highs. It actually came down as low as 93% down, which is like a screaming value zone. So our key targets on the breakdown here was between the $10 and $15 levels. The $10 was the 618, and as you know, with the Pulse chain chart, it actually recovered off that level, whereas ink was being sold down by the harvesters, the farmers. They were trying to make themselves whole from the price depreciation of the assets that they were LPing with. And that's why you see all these like little candles inside of here just continuing to sell off and sell off their harvested ink for other things that they believed in long term, which got this so oversold down here into the which on the RSI here we hit a low of a 19 or 20, and anything below 30 is like a relatively strong buy zone relative to where it's been. And so this actually ended up between the 786 and the 886, which is like a key. It's what I call like the deep value discount zone. This is where like if you believe in an asset long term, which in incentive you should, if you understand the tokenomics. If you don't, go check out my stream with RH Max from this week. I went deep on the ink token and why it's got value and why the inflation and tokenomics of it are important piece of why smart money will be able to create floors on this asset and then re-incentivize or reignite interest in chasing those APRs, which then locks up the assets, which then creates this perpetual money printing machine again. And this will just be the cycles we'll go through with the PulseX and Ink ecosystem. So in terms of times to buy, you could wait for the technicals on Pulse to come potentially. I mean, you're taking risk now because if the price falls back to the 21 and holds just even a couple more times, it could just do a quick leg higher. You could get kind of caught up and left behind. So maybe you should have been, on these consecutive tests of the 21-day and these consecutive support levels, you should have been at least adding some to your position, just knowing that you're below SAC price. And then because it's doing what it's doing, this was not a bad range to buy in. Let's see, guys. You got anything else you guys want to say while I'm looking through the stuff? I got to catch up here. You're muted.
We are muted, aren't we? I was muted. Yeah, I know that there's a lot of negativity regarding the whole ink down forever token belief, but and I'm trying to grapple my whole head with this as well, right? But it just seems to me that if the people who have acquired the most ink farm it, which they do, they're really just setting themselves up to be the ones to really profit from ink long term. And because as a little guy, right, in that situation, I already can see I have less and less power. I have less and less capability to produce ink. I got to buy it on the market if I really wanted it, right, to be able to earn yield from it, which of course isn't like at the moment. Doesn't make me feel good. I don't want to spend a bunch, going to buy ink in order to farm more ink. But ink is the way that farmers are rewarded. So it's going to have some value, whatever that value is. And in the future, people, farming are only going to get very little tiny bits of it, appears, right? As time goes by, as compared to everything else. So maybe I'm off a little bit because all the numbers it's a pretty complex equation, right? To figure out, exactly what would happen. Anyways, my sense is that people collecting ink are going to make out by farming their ink and put themselves in a place of being able to always have some sort of income without having to eliminate their positions.
100%. I'm in the same boat. I think you shared something recently, Access, where it was like, of the 4 million tokens that currently exist, like 3 million of them are in the liquidity pools. Like I don't remember the exact
They were.
numbers.
They've been getting absorbed.
Yep. So it's like they're getting sold into the liquidity pools, which means that you could accumulate a large percentage of the supply because so much of it are in the liquidity pools and people aren't holding it. So if you buy all that supply up, well, then you just have to wait for it to trickle back in to re-up it again. I think for ink that we'll see more of that kind of like big percentage accumulation when some time goes on, because right now all you have to do is wait the same amount of time PulseChain has existed for the supply to double again. So it's like if you wait a year, well, that's a whole year if you wait a month, then it only takes a month to double. If you wait a year, then it takes a year to double. So the longer you wait to accumulate that big amount of supply, the harder it is going into the future to get that exact same amount of tokens. And just like Crispy was saying, like the ink token unlocks the ability to farm more ink, especially in the ink PLSX pools. So by controlling that token, you can essentially dominate those pools. And then also people are essentially selling into your liquidity to be able to people are selling their ink into your liquidity because those are the pairs that it's being routed through to get whatever other token that you want. And so you're essentially owning the tokens that people are selling into. So if you really wanted to, so you say we go through a cycle of like 6 months, for example, and then you get all of these tokens in the liquidity pools, you buy them up, pair it into liquidity, and it's probably going to be somebody who has a big sacrifice, like somebody like Rackham, for say, that's the quintessential big mega whale in the system, who has so much PulseX that they're never going to be able to sell. Well, they might as well accumulate the ink, pair it, and then dominate the pools in that way with the percentage of their PulseX that they could never really sell in the first place. So they're making it productive and they're gaining more power in the system. And then as they let people dump their tokens into their liquidity by taking their PulseX or Pulse, they pull the liquidity when the ratio makes sense, pump up the price themselves because they have the tokens to be able to do that, and then set the liquidity in the new range, right? So like this ink token is setting up to be something that somebody with a large amount of weight can control relatively easily while also making it a productive asset in the meantime, which I think is the fundamental value of it in the first place. And any kind of utility added to it is just going to rocket it to the moon because everybody just needs some narrative to latch on to justify holding it.
Yeah.
Yeah. This one's another lightning rod discussion, right? Because you get people immediately, I totally disagree. It's going to go to nothing, blah, 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 right? But I'll tell you the attraction for mid-range players and others, right, is the fact that through the farm they can get that income, and get exposure to that, because otherwise you're not going to be able to get it. At least from those mechanisms. I mean, we got lots of different ways to get income now to earn rewards, but they're all quite volatile, aren't they? And they change.
It's almost like when you go, like when you got your little kid and you go into the pond to throw bread into the water and all the fish come up and they grab the bread. And it's like, if you are the one with all the bread, then you can get all of the fish to come eat the bread. Like, if you can get the bread for $5 today, but then then the amount of loaves that the bakery can make relative to the bread that you can store and hoard is less and less over time, then you control the market, you control the supply, and you acquired it all at a fraction of the price that you can then also set the new price at such a higher rate, because the bread factory can only make so much bread per day, but you may have all the supply. So like, you can bring the fishes to the game, and so that everyone else is the fishes, and it's the tokenomics of that fixed inflation rate that gives the ability for the economy to get that ink will get more and more scarce over time as more and more participants seek it as a form of yield. And so it's hard to see right now for a lot of people, but it's just going to take time. And once the price of ink is higher, the light bulb will click and they'll be like, oh, I get it now because the price is higher. But if you could understand why the price went higher in the first place, then you're more thinking about how a market maker thinks about the market.
Yeah. I'll throw a little extra spice in there for an add-on to all the slides that I had in the LP course. I'm sure you remember, Axis. I had a big. I ended my presentation with a big kind of synopsis of like the ink PulseX pool, and I was thinking about it more since the course, and I think one of the problems with what I presented was, it's like, if you dominating, say, both of those pools, PulseX, and you're trying to use ink as that income machine to, say, get more like stable coins to sell out into the IRL. Well, like, if you're just going through your own LP, like, you're not doing anything. Like, you're just selling your own coins in the first place. So it's just an inefficiency to do that. Well, if you only dominate one of the pools and let somebody else or other people dominate the other one, say you do PulseX Ink, and then you let other players do the Pulse Ink token, well, then you can get it to route through that. If it does it the auto router or you do it yourself, you can get it to go through that route. So you're no longer selling into your own LP and you're going through somebody else's to actually be able to extract value, rather than just selling your own coins, which is just like an extra way of selling. It's just like extra steps to do the same thing. So it's like, there's actually incentive for different people to dominate different pools, because if you dominate both, then like nothing is actually happening. You're just being inefficient in selling your own coins.
Or the other way to think of it is like, you could just, you're letting the market mature and grow so that you are bringing in more users. So what you're doing is you're buying your time back in the ecosystem, so that you don't have to wait a year for the inflation to get to a point where you can absorb a lion's share of the supply. So as a market maker, and during that year time frame, there's more and more liquidity pouring into your ecosystem to chase that high APR that you're the one providing in the short term for long-term gain.
Yep.
What are the future potential bull market years, or what factors can push them out? So, just off the top of my head, because I don't want to spend too much time, we're getting near the end of the show. Years to look for good price action on crypto is between 2024 and 2026. If you want like a breakdown as to specific points in that cycle, I would point you to Sami. He does a really good job of explaining the reasons how and why we would get there. So it's at your friend Sami on Twitter. And then, of course, I can't not show the cycle theory course that we're putting together over here. Which is going to go deep into, like, we've already been through 3 crypto cycles. They've happened this way. What can we take away from that, and how can we apply it to this cycle that's happening now? Anything else you want to add to that?
Well, this time is different, guys. I don't, it'll be different, but the same, right? Would we hear it last time? So I'll just, in a nutshell, we came into, the end of the last cycle. Many people outside of this environment, also within our community, were shouting, "This is a super cycle. We're gonna," and you know what? That didn't happen. So be careful what all of us say, right? We don't know. But that being said, things are different, in a way, and maybe they will be different. And I think that's what we're talking about when we talk about these indicators and looking at things. I mean, I'm seeing things that on charts that look like they're a year ahead, and it doesn't make any sense to me. I don't know why that's happening. They're all lagging indicators, so it's not like a prediction. It's what happens. And so, we might see 6 months from now, maybe, there's some big down cycle,
Maybe.
and then we come back up, or we go back up, or we keep going up, and we just won't know. So that's why it's important to have
We have certain inclinations of what we think could happen and how to position for it. Yeah, that's beyond the scope of what we can talk about today.
Yeah, I know, it's a deep subject, right?
All I can
All-time
say is
high
like,
before the
hopefully
happening.
all I can say is like Bitcoin just doubled in price and it's like over 30,000 a coin right now, and alts haven't even started yet. So be prepared.
Yeah, things could be nuts, couldn't they, Alex? I mean, Alex.
I mean, look at the pulse. Just look at the pulse chart analysis we just did. Like, come back to that after the show and think about that, like how quickly these things can move. And like, you could have never even positioned because you could like, oh, how'd that happen? I could have. There's a lot of different outcomes. I don't think it's going to act the same way twice. Like, this last cycle and the cycle before that did not act the same.
Well, some people are calling for all-time highs before the halving this time around, which is kind of weird, but but adjusted for how lackluster. I'm talking about overall crypto. I don't mean specifically Pulse or Hex, but considering how lackluster things were in terms of what expectations were, last cycle, then maybe it makes sense that it could reach the same kind of all-time high because that was way low. I don't know. But again, it's always the same thing. Can't do it on price. Can't do it on exact dates. You got to do it based on what's happening in the moment. And I think watching parabolas, watching some of the other indicators are going to be making much more sense. But.
Well, just to kind of plug the course a little bit, I think the big thing that it's going to give everybody who attends is a bunch of tools to make informed probabilistic decisions on how close you are to market tops and how close you are to market bottoms. So you pair it with just like some basic risk management strategies, risk management heuristics, and or at least give you some kind of edge to end up at the end of a cycle with profit, rather than having your whole portfolio holding the bag and having to wait till the next cycle to be able to recover.
All right. Have we talked about single-sided staking yet? Is that a thing now? So to do this, we have to give context in terms of what we have seen. What we've seen since testnet v3 is Richard Hart says something and the price moves. That's what we've seen. And so, the most recent thing that happened is all these Dinosaur PRC-20 farms that went live had these huge spikes. So like, Aave PRC, we did 1,000%. Link did like hundreds of percent, 600%. Uni, wick to wick did 2,500%. I don't know how much liquidity was extracted. Probably not a lot. But it's all started with this wrapped BTC pair, going from 40 per pulse all the way up to like 300 per pulse was a 500% move. And this is kind of going back to like how the admins of PulseChain have complete control over, the direction of where money is going to flow. And it's based on how they incentivize people to provide liquidity inside the farms to then get awareness to PulseChain, to get people from outside the ecosystem to come in and just interact with the damn chain, because that's the first step to adoption, is to get people to actually touch it, right? Pepe, as well as Comp and others that aren't on this list here, that have all just did these like crazy spikes. So what happened is now Richard Hart has like shifted his tone a little bit away from those, and now he's mentioned something about single-sided staking. and like what kind of an experiment that could be. So there is rumors that is coming, and with that is when we started to see these moves on the PulseX, Pulse Inc. prices, as well as after that announcement. So he's alluding to something coming, and the price chart's reflecting that.
Yeah, pure speculation on my part. But I would think that if we're talking single-sided staking, it's with PulseX, right? Which would account for that connection that you just drew between Inc. and PulseX. So that's my thinking on it. But I don't know what's going to happen. I have to wait until he does what he's going to do. One thing I have been observing, and I don't know if a lot of the people did it, is I did play around, right? I mean, even though I tried not to, I couldn't sit in my hands completely. Now I'm pretty quiet and not doing a whole lot. But when we were with all that playing around, and when I say playing around, it's grabbing something that looks silly to get and holding it and then turning it back in for more pulse than I paid for it. And I think a lot of people have experienced that. And so I wouldn't doubt if we see some sort of rotations, probably phase, probably, like haphazard. But as different things get narrative and then the narrative disappears, just like we saw with BTC, around BTC and these others, right? You can just start seeing that flippering, that movement back and forth. Now that's not my game because I usually pick those wrong, but I don't do that. But
I don't know. I heard that you were doing good lately.
Yeah, the ones that I did, yeah. But I think it's just it's
cornering
just because
cornering the market on an unknown hex token that we can't say publicly.
You're silly. You're funny. We keep going.
What do you think about the creator of Fux saying that he doesn't believe in the power of the T-share increasing the hex price? So Buck and Moon King B Roots did a 6-hour debate the other day on Twitter Spaces, and I caught maybe like 45 minutes of it or an hour of it, and I thought it was like a lot of really well thought out responses from Buck, and I thought Moon King is very much basing his analysis on what has worked before and cycle theory, which they both have their place, right? They both have made a lot of good points, and I can kind of say with confidence that I understand why Buck does not believe that the T-share is what's increasing the hex price. I think it's a little bit short-sighted in that, like, we all have recency bias from what just happened over the last 700 days of the dollar price of it going down, and like the lack of liquidity there, and like the unwillingness for new whales to really put enough economic energy in to reignite the system in a really valiant way that allows this to be true. But inevitably what's going to happen is this market will mature and grow, and users will come into the ecosystem, and at some point the decisions that are being made by the buyers will be so irrational that they will then once again be basing their decisions based on the power of the T-share increasing the hex price. So it's like more of like a Veblen good, so that when it's in demand for this very reason, but when it's not in demand, then this breaks down. But what it does is it gives an opportunity for the price to get so ludicrously low that somebody can inject enough liquidity to reignite the fire and absorb all of the liquid supply. We're talking like if E-HEX went to like 0.2 of a cent or 1/10 of a cent, like it would take just less than $10 million to buy billions, right? So I think that's like an inflection point that couldn't be ignored. And then once again, this new bull run would kick off, and it's just a matter of time. And then obviously this is less obvious, but once you're there, right, and the liquidity is there, and the redistribution has occurred, and I don't know if this is 5 years or 10 years, this thing's monetizing time itself. Once that redistribution is in place, and the prices can hold and function the market as a whole above like the all-time high on one or both of the hexes, it's going to create a situation where people are forced to admit the new reality, right? So we're not there yet. The epoch hasn't occurred. So yeah, I definitely see what he's saying, and I agree with him right now. But there's still a floor price to be set, and the inevitable truth that people will eventually start basing their purchase decisions on the power of the T-share.
So my 2 cents on this is a different take on it. Within our community, we have been painstaking about building narratives that are very simple and straightforward to understand, but they do leave out some details, right? So I don't think I didn't actually listen to Buck's debate with B-Roots, but I have heard him speak before, and so our narrative is T-share goes up and to the right, therefore price goes up to the right, and that's great, right? But that's not exactly what happens, right? You have to have people that want to stake, that want to mine, and they have to want more hex to do it, and in order for that to really affect the price. So it's really about adoption in the staking area, and we do see staking, right? But we have a greater number of people that are willing to speculate very short term than are willing to mine. And so it's just simple mathematics from that point of view that he's probably right that and we're seeing it, right? I mean, we need more people who are willing to lock up more hex for T-shares to cause the price to go up, right? Yeah. But that doesn't mean it's not a good deal, right? So Buck, yes, go do what you do and pump the hell out of the price, and I will continue to accumulate yield on both chains.
Yeah, the key word there is yield. It's people in a world starved for yield. If some market maker is willing to take the bullet short term, they will make a market, and then the regular people's decision making will be based on just that.
Yeah, what was I going to say? And no matter how long it takes to get to that next epoch, the longer it takes, the more hex is going to be required to get the same number of T-shares because the T-share rate's always going up. So it's kind of like the slow burn always going in the background, and no matter how long it takes to flush out a sufficient number of traders to get the T-share value proposition to actually show up more on the chart or have a greater effect on the price chart, like just the more violent that move is going to be because it's going to require more hex to actually get into the inflation of hex.
Yeah, such a long game. I mean,
yeah,
go ahead.
I was just going to say that I think like everyone is underestimating what we can accomplish in 5 years because of what they expect in 2. And like a lot of the thought process behind this whole thing has been a combination that's never been seen before, which is very illiquid, but really long time frame. And so it doesn't make a lot of sense in legacy to be putting so much effort and long-term planning and envisioning into something that's so illiquid, but that over time that it's going to build up the liquidity to match the strong core of the code and the yield, right? That's consistent. So I'm just I guess like I can see it. I can see how it's going to play out. It's just a matter of who can live the longest and keep stay true to the original thing, which was like long term and hanging on to your hat and just like riding it out and setting up a strategic staking ladder, or just holding the assets. Like Hex is unique in that way that Pulse and PulseX will be dumped for like crazy on the run up, so that you might not see the price performance you expect in a year or 2 years, but in 4 or 5 you might see it. And anything good that happens to Ethereum is going to be added to PulseChain. So it's just like a magnifying it and creating value laterally.
Can you imagine if they cut gas fees on ETH by like 8x?
It's going to change everything. It's going to help. It's going to be amazing for hexagons. That's like the most bullish thing that could happen for hexagons. That have both stakes on both chains. Like those guys are going to win the hardest out of this whole thing. It's pretty incredible.
Interrupted you, Crispy. Go ahead.
I don't think you interrupted me. I was thinking about something at the top of my head. As we're talking about this, I'm listening to Axis talk about some things, and I'm nodding now. But I don't think I would agree. I would have agreed a year or 2 years ago, right? And because what happens is as you mature within your understanding of crypto and you experience more, you begin to see some things differently. Maybe not. I'm not saying Axis is always right. Most of the time, he's right. I think you're most of the time right. But
he does a good job. He does a good job.
99.9%, right? Give us that a little bit. But what I mean is, like those whole narratives, like someday in the future, you'll never have to sell another hex. Well, I didn't know that I necessarily believed that before, but now I'm beginning to believe that may be true. Because you're talking about maturation of the markets and these different infrastructures and all the rest of the stuff coming up. Yeah, I mean it's certainly a possibility that these things come to, because we already see an example of people doing it, right? But I mean, I think for like the common average person who sticks with it, they might get to that point.
Can you imagine, Crispy, ever yielding so much hex from your stakes that it's more than you could ever buy from like your actual like cash income?
It's almost like I said. It's almost like I said that in my head. but it's true, and I think that's what we find, right? That's because I said that to you, right? So that's exactly how I feel about it, right? Because it's like, I mean, you guys, I tell you all the time, like $200 is a lot of money to me. If I lose $100 on the ground, go to the casino, lose $200, I get upset, right? So buying, cost me, it costs a lot to buy hex,
Imagine being down 98% on your hex bags, but you still can't buy a meaningful amount with the income you have over a year or two.
Yeah,
because of your relative position size, and like that's what people aren't understanding is.
Yeah.
And that's my point, is like the yield that I get from my hex staking is great enough that is the case. Like I'd have to go borrow money. So I'm not selling crypto, right? I got to go borrow money in order to buy the hex that I get now in yield. And
wow, way to flex on all of us, Crispy.
Yeah.
You're the winner here.
No,
but actually,
yeah. Go ahead.
I think that's a good point, and like everyone's I think there's like a general evolution of stages when you're in hex, and like Crispy is already reaching like the upper echelon of that, where like he's accumulated so much he doesn't really need to enter, but he still needs ways to be able to exit, but not wanting to hurt the underlying thing that's providing him that income, right? Like ideally, if you're going to extract value, you don't want to do it where you're like undermining the rest of your bags going forward. Well, that's where all these other like dexes and protocols that are building on top of hex come into play, where you're able to plug your hex in and then be able to get access to fees or extracting other values to be able to exit. Where the power of your bag now doesn't necessarily become how much you can sell, but how much of these other income generating products you can participate in and gain power in. It becomes a game. It transfers from a game of price to a game of power. And then you're playing a totally different game at that point.
Other thing that I'm reading some of these comments, and there's some really good stuff that I want to touch on. One of the things was, do I think that Moon King what Moon King was saying, that Pulse will be outperforming Hex and PulseX. So we saw Ethereum launch a few years after Bitcoin, and it outperformed Bitcoin for a cycle, but it's never made a new all-time high in Bitcoin terms. And I think in the same way, Pulse and Hex are going to have this tug of war where Hex will overperform for periods, and then Pulse may overperform at the peak. But that money's going to end up back in the store of value, which is Hex. That's like the quick and dirty of it. So just because of what we're saying about how hard it is to get the Hex yield at some point once your bag's big enough. And that is a perpetual money printer, so it's not something you easily want to let go of. I think a lot of the, dolphins and sharks are realizing that even at, 0.8 cents Hex on one chain and 2 cent Hex on another chain, that even though they're cheap, if they didn't have income coming in from outside, and even if they did in a lot of cases, it's still not enough to really compete with your yield. And so you just want to keep growing that, right? So you're good.
You got to think twice when you hit that sell button, because once you do, like that position's gone. You're not getting it back again.
Someone said they wanted to see some E-HEX hopium. So here's E-HEX. Like, let's see where we're at. It's been in a oh, whoops! I guess I gotta fucking share my screen here. Okay, so here's E-HEX, and it's in it like triple bottomed, and then it ended up ripping off the lows about 75%, and now it's been kind of consolidating and being accumulated below these resistance lines. And so what we're doing very slowly is we're creeping back up. And if you notice here, we got this now a new uptrend has started on E-HEX, and this is the same as what we're seeing on Pulse. It's the same formation. And so E-HEX is even showing some patterns that look a lot like what's going on over on the Pulse ecosystem. So the bonded liquidity is actually working across the chain in a lot of ways because any arbitrage opportunities making the charts look the same. There's also this huge wick on this sell-off candle here, which I thought was pretty optimistic. And so, here's some of your upside resistance levels: 0.9 of a cent, 1 penny, 1.09 cents. And then with that, you got HEX here on PulseChain performing tremendously well. In terms of the RSI, we had a low on the 30 level, which is like that's a major important level to watch. And then an uptrend, a blast off that low, same as E-HEX. And then a top at the 70 level, another top at the 70 level, which was a double top here, which was previously resistance here. So this is just respecting this line here. And so that was respected. And then this was like a line of confluence here between what was resistance on this double top. So the P-HEX charts is like mathematically playing out like to a T. It's like respecting all the levels on the way up and the way down. So we had support, resistance at the 70, support at the 30, and then you started an uptrend. And then we had resistance on this breakout of the downtrend. So what was resistance was finally a breakout. Then we started a new channel because we got rejected off the 70 level on the RSI, come back down to test for support, come up again. Another pop, top of the channel, resistance. So it's like technically acting very well. Like it's respecting the levels to the upside and the downside. And the RSI is showing the same levels of respect. And then we've had this breakout here where we broke the 70 level. And that was this big move where we tested resistance here of the previous double top. That was a sell-off at that level. And then money came back in and pumped it even a little bit higher to this resistance level here. So it's just gradually taking out higher and higher levels. Now, whenever you hit the 85 level, it's usually a time for a pullback. So I wouldn't be surprised to see P-HEX potentially do a head and shoulders here and come back and test our upper channel trend line as support. But with that, in terms of E-HEX, if I pull up the E-HEX chart here, 1 second. Disregard the this big red line here. That is a glitch with Dex Screener, but you can see here.
Oh, I thought that was your prediction.
Not so fast.
This is the hope. This is the hope.
You got what you're asked for.
So no, disregard. But you can see that the pattern structure is the same. So like a wave 1, wave 2, wave 3, wave 4, wave 1, wave 2, wave 3, wave 4. So it's kind of like emulating the same movement, except here we had a decorrelation event where P-HEX really started to leave Ethereum HEX behind. But this is in a ascending broadening wedge pattern. This is typically a bearish pattern. So we may see this E-HEX come up here and break down and get rejected even lower under FUD or any other thing. And the wider the gap gets between E-HEX and P-HEX, the more opportunity in the chart. Because eventually what's going to happen is you are going to get that market here, like you're going to get that reduction in gas fees at some point for Ethereum. And so then HEX becomes more valuable on this chain. And if this gets down to like a different ratio, so let's pull up E-HEX, P-HEX here. This is the ratio chart. So what this is saying is that E-HEX has just been bleeding out relative to P-HEX now for a significant amount of time. And at least 50 days of just bleeding out. And so now you're in this descending channel. And it's in free fall, so it can continue to E-HEX can continue to fall. But here you see 1 to 2, 1 to 3, 1 to 4. The farther you get closer down to like this 1 to 3 range, and then potentially even as low as 1 P-HEX to 4 E-HEX, like it's going to be a huge opportunity to acquire a massive amount of T-shares on that other chain. That no amount of gas is going to be like, okay, the gas fee, like at some point, the code being the same, the yield being even better over on Ethereum, it's going to be an opportunity for this thing to rubber band back closer to maybe perhaps 1 to 2, or maybe even one day it'll come back up and try to meet parity. But that's with under different conditions where people aren't being fudded out so much on the E-HEX side. And with the, yeah, go ahead.
Well, tell me if I'm wrong about this. I've been watching the E-HEX in terms of pulse, and it's been in a pretty good range. You know, right around that between 80. You know, of course, it was higher earlier, but ranging between 75 and 95. Most recently, you know, like 85 pulse per E-HEX, and so I don't think that's like tremendous like performance. But I like it because what it's telling me is that I haven't lost any value with my E-HEX in terms of pulse. It's just I didn't get these mad gains,
Mm,
you know.
good
And
point.
so
That's a
one of
good
the things
point.
I'm trying to watch on this is like if I see that ratio drop, then I'm going to go buy. I think that's what I would do. I guess it's a little different, so different
So
way to
that's really
describe
good
it.
alpha that Crispy just gave
That's
us.
a good
That's
point.
basically you're watching
Yeah.
for these range
Wow.
lows here.
Yeah, yeah,
So when
exactly.
these range lows get hit, I mean,
That would be a time. That would be the time to rotate. If I wanted to rotate, that's the time to rotate. Was when I see something
7%
like
away,
that.
so it's really not that far.
Yeah.
And that, you know,
That's
that
really interesting.
7%, if P-HEX continues to rise, and E-HEX does hold the position while Pulse and P-HEX are rising, or fall slightly, that 7% might equate to, you know, this coming down to that 3-to-1 ratio, which I know people have publicly spoken. If it gets down to 4-to-1, they're auto buyers. But like this is probably the front run zone, 18% lower on E-HEX, P-HEX. The other thing here, you guys, was just the stochastic RSI. So this is measuring momentum, and what it's saying is that E-HEX is starting to go flat. The blue line here is flat relative to the slow line, which is the orange line. If it gets back above the orange line and then makes its way to the 20 level, that's when you're going to see momentum really kick up into the E-HEX price. So we're watching that on the stochastic. It's flatlined right now, so it's like basically in free fall. Which so like now is not the time to do the swap. But like like Crispy's saying, like maybe you keep an eye on that E-HEX to pulse ratio, and then in terms of like the RSI, if you did like get this massive capitulation, like the lowest I've ever seen was on any of these hex type assets was on Hedron. It actually came down to this 6 RSI level, which is a significant amount lower. I mean, it would be E-HEX going down like crazy. I almost don't even think anything's possible in markets, but I think this is relatively impossible to get that low. It'd be another shoot. I don't even know what percent wise this would be. Quite a bit lower. Let's see. I mean, you're talking about 70%, 75% weaker than it already is. I don't know. BankX would have to mega dump or something like that, you know.
Yep.
So that's kind of the hot take on E-HEX versus P-HEX currently. I think this is setting up to be one of the greatest contrarian plays in our ecosystem. I think it's being overlooked at this point, and you know, people are doing victory laps instead of like paying attention, and they might get burned for it.
Yep. I think the ultimate thing to flip sentiment in the whole ecosystem is E-HEX just rocketing up. Like that'll like flip things immediately because everyone will be like, oh shit, what's happening? Like just getting caught off guard and immediately going into like I need to buy or accumulate mode.
Yeah, remember there's
That's
no
my speculation.
there's no liquidity on the ETH side, so we're talking like 800 grand is backing the price of HEX in USDC, and in terms of ETH, there's probably like 190 ETH in there or 100 ETH, something like that. I haven't looked at the chart in a while, but not a lot of US value, maybe $3 million, which is kind of where we kicked off the last bull run from 2 cents up to 56 cents was around those levels. Less liquidity equals faster price moves.
Yeah, and I also think you have the other aspect of this too, right? Is the majority of, well, not majority, a good amount of my ability to get out without slippage. If I wanted to get out of E-HEX, I swap over to Pulse. That's what I would do. I haven't done that yet, but I mean, I would do that, right? And how would I do it? I go through the bridge, and I do my swap over there, and then I take my next action, whatever I wanted to do, because that's going to give me the least amount of slippage. And so I'm maintaining, as long as that infrastructure is in place and the liquidity remains over there for us, that's a good path out for E-HEX. So then I don't have a real concern about being able to get in and out of E-HEX, right? And so this is where I come back to those APYs and watching how they're different. And sure, right now, not a lot of difference on the short time frames, but once we get to the point where, 30 days ROI is double on one chain versus the other, then, maybe I'm willing to go over there.
So 4.177% times 20x is an 83% difference, which could be, that's meaningful.
Yes, yeah, in dollar terms, sure.
Yeah, in dollar terms. So
Yeah,
if you didn't catch what I did there, we did you can see on the difference between the two chains right now based on share rate is 4.177%, and assuming E-HEX does a 20x sometime between now and the time we're dead, you're looking at potentially an 83% gain over just staking on PulseChain alone, for example. So you're what the counter to that is you're hoping that if let's say you shift it out of E-HEX and you put it into P-HEX, that your P-HEX trade is outperforming that much as well. So like in terms of this trade, let's say you did it here, that's 117%. But the only way that trade stays that good for you is if you did it here, if you had the nuts to leave E-HEX here and you're still holding it, and then you swap some back before it comes back up here, where then again you'd be not overperforming the 80%. It's eventually the ratio gets so good that somebody's going to take the profit, because you're basically stealing money from somebody else at that point in terms of like value. You're maintaining your value. It's not what you make, it's what you keep, right? So you could be like on cloud 9 right now because you dumped all your E-HEX here and you're up 117%. But if this thing rubber bands, then you just lost all the gains that you made. So at some point, somebody's going to take profit back into E-HEX or into stables or into something, right? And so this ratio may come back closer to these levels here.
I'll show something that kind of wraps up my my opinion of it really quickly. Hold on. Let me pull it up.
Yeah, sorry guys, I was drawing here. This was one second before you go there. This was the 117% move here from here to here. I didn't realize I had my screen up. So if you would have swapped here, this would have been 117% gain. But the rubber banding I was talking about is eventually this is going to come down and snap back. And so unless you took profits down here, let's say you did it here where you had to have a lot of steel balls to do it, and you swapped your P-HEX for E-HEX, and then now you're up 117% in HEX valuation terms. At some point, somebody is going to take the trade and either go into stablecoins or perhaps even come back into E-HEX, or new money will come into E-HEX, and then this will rubber band back up. And had you not taken profits when the ratio was so extended, you're just back where you started basically, and you may only be up 20 to, like this range here is only 40%. And this range here is 57%. So that's still not outpacing the potential 83% that I had calculated from staking on Ethereum, and then Ethereum HEX seeing 20x. So, all right. Anyway.
That's it. That's my commentary on that.
Yeah. Oh, shit.
Yep.
Seesaw, baby.
Yep. That's it. That's my opinion. If you want to know what I think about it.
All right, guys. We appreciate you. We love you. We'll catch you on the next episode. Thank you guys for joining me today. See you in a couple weeks.
Thanks, Axis.
Thank you, everybody. Peace out.